everyone, welcome to Fairy Trades. So today we'll be talking about the relationship between technical analysis, fundamental analysis, and price action. There's been this argument or conversation rather about fundamental analysis being better than technical analysis or technical analysis being better than fundamental analysis. And what I actually think is that price action is the ultimate. And this is because I think price action is the reflection of the actions everybody in the market is taking, be it the smart money trader, the fundamental trader, the technical trader, everybody, regardless of what you're trading, price action shows or reflects what you're doing. So long as you can read candlesticks, you understand candlesticks, you're going to understand what people are doing in the market. Now, if you can understand what people are doing in the market, that means you understand price action. So once you understand price action, you will see none is better than the other. And regardless of what concept you trade, SMC, ICT, fundamental, technical, regardless of it, you need more than your trading edge, your setup, your analysis to be profitable in this market. That's just you. You need more than that to be profitable. There is trading edge, which is your analysis. Then there's a mental edge to it, which involves your discipline, your patience, your consistency, your risk reward ratio. So you need more than your analysis to win in this market. You need to have this mindset that helps you make more money and take full advantage of your profits. When you're winning, you make more. When you're losing, you lose just a little, such that you'll be profitable overall. All right, so aside that, price action is beyond analysis. You need to understand market structure, you need to understand candlesticks. There are different types of candlesticks. There's engulfing, there's pin bars, there's doji that even insinuates indifference or indecision in the market. So price action is quite deep. It's like really, really deep, deeper than what people think. But if you understand price action, you would know that no, fundamental is not better, this one is not better. But that's that. I'm also going to show you how price action insinuated the move before the CPI data release. Now please do not get me wrong, I do understand that fundamentals move the market, they legit move the market. That's a no-brainer. But you would see it on the chart, you would see the actions people are taking on the chart just before the fundamental data is released. You're going to see it on the chart. Probably chart is going to be consolidating, or there's always that sign, that heads up in the market on the chart. It just depends on your interpretation of it. You might miss it and you might not miss it, but it's always right there on the chart. If you understand price action and you can read it, you're not going to miss it. So I'm going to show you how I saw the price action. The only reason I didn't take it was because it's CPI. I've seen what CPI has done to people's accounts. People have lost accounts, blown accounts, lost more than they bargained for or set for, blown their profile accounts just because they traded the news. I mean, slippage is real. Slippage actually happens a whole lot. So I avoid the markets because of that. But it doesn't mean that the price action is not telling. It's always there. It's always there saying this is what's going to happen next. You might not see it and you might stay out, because I actually think it's better to stay out. The risk reward is not worth it, and there will always be opportunities. And it is safer opportunities at that, where you can trade your plan your trade. Market is going to obey your SL. You're not going to lose more than you bargained for and all of that. So that's that about fundamentals. Some people are actually called fundamental traders. They know their shit, they know what they are doing, and that's all good. Thumbs up. I'm just saying that without having to analyze the data, the before, after, what's going to happen, you just can see it on the chart as well. If you know how to read it, you're just gonna see it. So I'm going to show you now, watch the next video now, how I interpreted the price action and then sent it to my Telegram channel just before the data renews. Thank you. So on Tuesday, when the CPI data was supposed to be released, I told them to trade safely because, of course, I was taking precautions. I didn't want to be caught in the volatility. But
I shared the BTC chart showing the price action. This is BTC. There was this resistance, and it was showing the rejection the first time, second time, and it was just clear that market was waiting for a push down. There was something that was supposed to push the price down because it just wasn't going up anymore. And that was it. It was CPI data. The only reason I didn't trade this was because of volatility. I mean, slippage is real, and risk reward ratio, I do not think it's worth it risking your account because of CPI. There will always be other opportunities. So this was BTC. It was still at 22,000 plus, and this was Euro USD trading at 1.01. I saw the setup, I saw the price action screaming sell, 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 but I couldn't take this trade because of the volatility we're expecting. All right, that's it. I said I'm avoiding incoming volatility and all that. I actually did take DU though, but I wasn't taking full risk because of that. Now, this was the after Euro USD. BTC is now trading at 19,900. This was what happened afterwards. Can you see this candle? This candle was the 4-hour candle after the CPI data, and it kept going down until it formed a support. So basically, when I say support and resistance, I mean it's beyond support and resistance. It's basically price action, right? But still support and resistance. Without support, it wouldn't go up. Without resistance, it wouldn't come down. While EU now, this was the fall that happened after the CPI data. Look at it. It fell all the way below 1.0. Below 1.0. So I really do think price action is just ultimate. But while price action is important, it's just a trading edge. There's still mental edge, right? That's what I wanted to show you about price action on the chart.
All right, thank you for watching. I hope I've been able to make the relationship between technical analysis, fundamental analysis, and price action a bit clearer. Also, I do not think one is better than the other, while I also think you need more than your trading edge, you need more than your analysis or setup, your bias, you need more than that to be profitable in this market. That's why we talk about trading psychology, trading with an edge, basically, on my Twitter space every Sunday by 7 p.m. I'm going to drop the link in the description box, so you can join us every Sunday. Let's improve your psychology while you also learn how to trade with an edge. Come share your experience, come learn from other people's experience and see you're not alone. Thank you.